If we talk about an organization that doesn't have a predefined treasury policy, start with your risks. FX, interest rate, commodity if it's relevant, funding, bank relationships. That's another key one, because what you don't want is that someone in your local market going and talking to banks and committing to capital that isn't in line with a broader treasury strategy for cash and banking.
What can we call or define as a good treasury governance process in place?
Policies are not a one-size-fits-all. Just because you had a policy in a previous organization doesn't mean you can implement it within the same organization. Same with the governance model. You need to understand the risk profile of your business, the risk appetite, and partner closely with your CFO and your board to understand how risk is perceived within the business. A policy should not be a 200-page manual. We don't need a textbook. What you need is...
Really thank you for joining me today. And I would love for you to please, for whoever doesn't know Jason, introduce yourself. Tell us know a little bit about you, where you come from, and what's your title currently, and what's your background in Treasury.
Perfect. So, well, first of all, Happy New Year, and thank you for inviting me.
Thank you. Happy New Year to you.
I think today's topic is incredibly important. So I'm Jason Spanos. I'm the group treasurer at a company called Advanced Inhalation Rituals. With the world's largest manufacturer of shisha molasses.
That's how we became very close friends.
Absolutely. Now, but I've not been based in the Middle East for that long. I've now been here for just over 3 years. But my corporate treasury career spans roughly 23 years, mostly based out of the UK. So if the accent doesn't give it away, I am British.
Yeah.
Of Cypriot and Polish origin, but born and bred in the UK, in London. And I started my corporate treasury career at Cadbury's, with Cadbury chocolate company. Now, it was at the time Cadbury Schweppes. Later, it demerged the beverage element and we kind of retained the confectionery business as Cadbury PLC. From Cadbury, I then moved on to BAT, where I spent 7 to 8 years. Then formerly in the Treasury in Coca-Cola Europe Pacific Partners, before I then moved across to the UAE. Now, the interesting story behind my journey is that I've been involved in 3 major transformations. I don't know whether that's luck or I should see it as negative, but it certainly gave me a lot of experience in not just kind of transforming treasuries, but really kind of understanding the crux of what is important, what makes the business tick, what makes treasury tick. And it's enabled me to really drive professionalism and growth within different treasury organizations. And my first introduction to the Middle East and what kind of gave me a lot of passion for the region was I developed the regional treasury function for Middle East Africa for Cadbury's. So previously it was very much kind of a center-led organization, but it was clear that particularly the challenges within the region across all treasury topics, you needed that direct touch point into.
So they didn't have a regional treasury focus on this region, the Middle East and Africa. This is where you came in.
Correct. They had an international treasurer that provided guidance and oversight across, what is the central policy? How should that central policy be applied within the region? But in terms of really drilling into the detail, traveling into the relevant countries and really guiding them and acting as both a business partner but as an advisor for Treasury is something that didn't exist to the depth that was probably required and is probably required even more so nowadays.
And this is very interesting because a lot of people, and especially treasurers who come from a background in Europe or the US, and they come to manage a region like ours, Middle East and Africa, and they get quite surprised when they see the difference in regulations, the difference in governance, and the set of policies and procedures that you need to tailor for the region, right? And I believe, and this lands put a very good landing to our discussion today, which is mainly around governance. How do you see the difference in governance and building policies for companies that's operating in Europe and companies that want to operate in the region here in Middle East and Africa?
So look, I think if we start at basics in terms of what is governance, ultimately governance is how decisions are made, who's allowed to make those decisions, and how accountability is enforced. What a lot of people look at governance as being is bureaucracy, and it's absolutely not bureaucracy. It's the operating system that guides the behavior of the business. So I think there is perhaps an evolving understanding within the region of how important governance actually is, particularly in Treasury, where governance answers the question of who can commit cash, who can commit risk, who can commit credit, under what limits, and under what oversight. So in Treasury, it's particularly important because Treasury touches the company's most sensitive areas. So, cash, debt, FX, interest, and ultimately counterparty risk. And the problem is the poor governance, and I think there are many examples out there of poor governance. They create value leakage, and within the region, it's challenging because a lot of positions, if they're left unhedged, can lead to value leakage. But in this region, you can't hedge every exposure that you have.
Yeah.
So that's an issue. The other issue is around cash, idle cash. You can't always generate a yield. You can't always repatriate. So again, what is the right governance to support the structures available to repatriate cash? Fraud or control failures can be a cause of or consequence, should I say, of poor governance. And ultimately, poor governance can damage the credibility with banks, with rating agencies, with auditors, with investors, and ultimately your board. And what you want is to ensure that the right governance is in place to enable stronger, faster decision making with confidence, clear escalation through crisis, and trust ultimately from your exec.
So what I want to do today is, so you just defined governance, and governance, as you mentioned, has a lot of things under it. So we want to take it step by step and go through different layers of governance, starting from, and we're speaking specifically on Treasury, and whether you see fit, we can discuss specifically even in Treasury for the region, Middle East and Africa. But what I want to go through is first, how does governance define the organization structure for Treasury? And then how to set the Treasury policies and procedure. And then under the Treasury policies and procedures, we want to discuss the risk management, the internal controls. And then under that, the compliance and the regulatory requirements. Because as we mentioned, in this region, the regulatory requirements are different, way different from what you can see in Europe and the US. And then we can, at the end, see, okay, after we go through all of this, what can we call or define as a good Treasury governance in place, or a process in place? So let's start with the organization structure. How do we define the organization structure for a Treasury department, given the right governance structure? And then we go through the policies and procedures and risk management.
There's a lot you want to unpack there.
Yeah. So, but let's take it step by step.
Let's take it step by step. So I think your first one was just around organizational structure. So structure should follow risk profile and scale, not your headcount. I think that's the first point. So there needs to be a clear segregation of duties. So front office will focus on execution. Your middle office will focus on risk and policy oversight, whilst your back office will cover kind of settlement and accounting. And once you define those roles, there needs to be kind of clear escalation paths. So what decisions are you empowered to make within Treasury? So what decisions stay in Treasury? What should escalate to the CFO? What delegated authorities are in place? And of course, governance scales with complexity. Are you a centralized or a decentralized Treasury? How many countries do you operate in? Do you operate a shared service model or an in-country model? And to what degree is the country autonomous? And that's where policy then, which I think is your next point, that's where policy matters, because policy translates strategy and risk appetite into practical rules.
Okay, so before we step into policy and how it defines the governance and the rules around the Treasury, what you can and you cannot do. First, you mentioned the organizational structure, and we spoke about different departments there.
Yeah.
The front office.
Yeah.
And you mentioned something that I've never heard of, which is the mid office.
The middle office.
The middle office.
Yeah.
And then the operations.
Yes.
So I know the back office and operations. I know the front office.
Yeah.
But for the people who don't know, let's briefly define front office, middle office, and back office for the people who don't know.
So the front office activity will be the activity that is very much kind of market facing. There are different constructs as to who can be front office. It could be the group treasurer, it could be the deputy treasurer, or you could have a front office team that essentially are the face of Treasury in face of the external, your external counterparties, your external
stakeholders like banks, etc.
Correct. Correct. So when it comes to execution, whether it's FX, if it's rates, if it's capital markets, it's very much kind of carried out within that subsection. And obviously, then as you say, the back office is any of those treasury flows, any settlements sit within that arena. But within your middle office, it's essentially the function that makes sure that what the front office is doing is monitored, tracked, reported, documented, compliant with policies, in line, operates in line with regulation, and ultimately, as I mentioned a moment ago, keeps front office honest in terms of performing within the delegations and the authorities, and ultimately the governance structure that's in place.
So
quite often, sorry to interject. So quite often you will have your risk and controls analyst as being the person that carries out that middle office activity.
So can we say that middle office is more of an internal control function?
Correct.
Okay.
Correct.
So that's why it was new for me, because from what I have seen in the companies I've worked for, the middle office is usually done by an external department, not within Treasury, which is the internal audit. They would come in and say, okay, these are the transactions that you are doing at the front office level, like what you mentioned, if it's a financial transaction, if it's an FX transaction, whatever. And then they want to make sure that these are done as per the policy, that you have done the right process, used the right banks, and then got the right approvals before executing, and then check on the back office that they have recorded these transactions on the right systems at the right times. So yeah, that's why that's very interesting. It's very interesting.
But the middle office is very much Treasury centric, and anything that they will then need to report, they will report to the internal controls department, who look after the overall control environment and ensures that there's certain categories and certain parameters that are followed in line with that group risk appetite, that control navigator, as we want to call it. But middle office is specific to Treasury.
Okay, so let's take a step further, and then how can we build a policy that defines this organization structure? And then the next step would be, within the policy, how can we integrate the different risks and try to cover the different risks, from risk management to FX, interest rate, and defining the relationship with the banks, etc.
When it comes to policy, I often use the analogy of a good versus a bad CV.
Okay.
Okay. So my pet hate is when I see a CV and it's written as a job description. A policy should not be a 200-page manual. We don't need a textbook. What you need is for a policy to be clear, concise, principle-based, reviewed regularly, and actually used. Many organizations, and unfortunately, I hate to say, I've seen it through my conversations here in the Middle East, a lot of corporates will put a policy in place, and it's a tick box. Do you have a treasury policy? Yes, we do. It needs to be used. It needs to be refreshed. It needs to be signed off, and it needs to be then ratified at the board on an annual basis. And so it needs to be fit for purpose, and it needs to be maintained and kept fit for purpose at all times. Because as we say, policy translates strategy and risk appetite into practical rules. I mentioned that before. It acts as a training tool for those that do not understand Treasury. Many people don't understand Treasury. We find ourselves kind of defending the space and reminding people of the importance of Treasury. It acts as a protection for Treasury staff, because it means that people that operate and work within Treasury are following a predefined set of policies and processes that are attached to it. But it also acts as a reference point during any potential disputes or audits. So it's a critical piece of governance that actually then supports your structure and how your structure operates. So as we say, middle office ensures that any activity is
well
in line, is well defined and operates in line with your
risk appetite and regulations in the country you're operating in, etc.
Correct.
When you're saying training, I would say it's not just training for people who are not in Treasury. I remember in each company I worked for, the first thing I do when I join the company is read the Treasury policy. Because it gives you an idea, okay, what's the risk appetite of this company?
Was it written as a manual, or was it written
as
an actual policy document?
In some companies, it was just written to be there.
Yeah.
I've seen that. And in some companies, it was really well written. And to be honest, I have learned a lot from just reading Treasury policies that were well written. So I do agree with you 100%. So let's take a hypothetical situation. Maybe you went through this and say you joined a new company, or you're in your current company and then they have exposure to a new business or a new region, and they want to have a set policy for this new region. Walk me through how you define what needs to be in the policy, and how do you basically start drafting out the policy and seeing, okay, what needs to be there, what we can cover within the policy.
Yeah. So look, a policy, in my view, needs to ensure that you're touching on each of the areas that treasurers need to focus on. So, quick introduction within the policy of what is the objective of this document. That's the first most simple thing, because you can present a policy and people won't understand it because they're not being taken on a journey. So introduce the policy, introduce what the policy is trying to achieve, and if it interlinks to committees or other policies within the business, introduce that. Don't cover it later in the document. Introduce that at the start. Then talk about the organization. What is the organizational structure, and how does the business then interact with that organization as per that organizational structure? Quite often, it'll be, again, front office in a large kind of international business, because they're the ones that'll be talking about local funding. They'll be talking about is it intercompany, is it equity, is it debt? It'll largely be front office. So quite often you'll also see a regional treasurer in that kind of front office space as an extension for activity that's carried outside of the headquarters, with a clear mandate from the headquarters as to how they should be operating. So it's one policy, but it covers not just head office activity, but global activity. And then each section should be specific to each risk within the business. And it needs to be a policy, not a procedure. A procedure manual is very, very different. So if we've gone into a business that doesn't have a treasury function, or we've gone into a business that has just acquired one that doesn't have a treasury function, it's important to integrate that business as quickly as possible, and integrate into the policies, processes, and procedures that are in place for the acquiring organization. if we talk about an organization that doesn't have a predefined treasury policy, it's start with your risks, FX, interest rate, commodity if it's relevant, funding, bank relationships. That's another key one, because what you don't want is that someone in your local market going and talking to banks and committing to potential capital that isn't in line with a broader treasury strategy for cash and banking. So there needs to be a section on cash management. Insurance, in some organizations, insurance sits within treasury by virtue of the fact that it looks after risk, and therefore try and bring in as much risk to those that understand it and are able to manage it. Regulation and how to respond to regulation should be within the policy as well. So very clear sections. Within the sections, what is the risk? What can you do to manage that risk? So what's permissible? And where are the authorities in order to get these things done?
Yeah, you mentioned that it needs to be a policy, not a procedure.
Yes.
So for the people who don't know, let's define. You already defined the policy.
Yeah.
Let's define a procedure so people would know what's the difference between a policy and procedure.
So a procedure is the how-to, whilst the policy is what can you do. Okay, so the how-to. So if you just hired someone into your team, and they obviously understand. Hopefully, they understand the concept of treasury. Maybe you have to go back to basics if it's a junior role, but ultimately, it's okay. I've got this new system. Have you used that system before? No. Well, if day one you need to follow something, what do you do? And it's a cheat sheet. It's a cheat sheet on how to do the activity that you've been hired to do in your role. But that's obviously when it comes to roles that are more operational focused.
It can be part of a policy, right? Because I have seen policies where you have the procedures maybe at the annex or at the end of the policy.
As I say, it shouldn't be a manual. A policy needs to be a clear and concise, principle-based document. So in my view,
it shouldn't be part of it. It should be separate.
It should be separate.
Yeah. Treasury is changing fast. New risks, new regulations, and new opportunities. You need to keep up to speed. The ACT has been helping treasurers for almost 50 years through networking, events, and qualifications. So if you want to grow your skills and connections, join the community that will give you the voice and the chance to shape the future of Treasury. Visit treasurers.org now to learn more.
I understand that when you joined IR, you were getting a preparation for an IPO. There is a huge difference when it comes to governance for a private company versus an IPO company. And I can imagine how much work you have went through as a Treasury department to get things ready for the governance for an IPO. So let's speak briefly how things were before the IPO. How did you get ready for the IPO? And how you see now things are being different? How dramatically different is it with an IPO governance versus a non-IPO governance?
Yeah, perfect. No, I think that's a great question. So look, the Treasury Department at AIR is not older than 7 years old. Because it was previously a private founder-led company. What you find is that the focus in a private company is more around kind of your basic controls, cash protection, but it tends to be quite informal. Now, moving on from it being a private company, back in 2019, it was then part acquired by private equity. And that is the first step towards changing up the governance model, because you're then answerable to your lenders and to your investors. The governance is driven by that, so you need stronger discipline, stronger reporting. There's a focus on liquidity forecasting, and that's essentially when Treasury started to get its legs. So my predecessor, who held the role for 2 years, he did a great job at building that foundation. So working and educating the business on what is Treasury, what is that kind of journey towards giving the center more visibility, and cash cash flow forecasting, direct cash flow forecasting, was essentially born. So getting that visibility of the cash, understanding the liquidity profile of the group, understanding what and where the exposures sit, alongside then putting in place a treasury policy, which then guided the markets as to what they should be looking at and how they should be communicating to the center, became important. It came to life. But the treasury team was structured more like a payment factory. So whilst the treasurer was focused on that kind of global visibility, the treasury manager and the treasury analyst or treasury accountant at the time, they were very much focused on the day-to-day, the daily cash management. And without a treasury management system in place, it also meant that things were quite manual in terms of making payments, in terms of cash planning and positioning. So it was very basic. So when I joined, and I joined the business to kind of make sure that it's IPO ready, and we announced several weeks ago that we are looking to be a publicly listed business in 2026. There's a significant amount of governance that then needs to be put in place in advance of that. So I was brought in to professionalize the function. There was analysis done by Deloitte that actually kind of pointed out where the governance gaps were, and pointed out kind of what policies and what committees perhaps needed to be redefined and refocused.
How dramatic the change that was required by Deloitte from a non-IPO company to an IPO?
It was
How did you see?
It was significant. I mean,
and was it all Treasury?
No, it wasn't just Treasury. It was across every corporate function within finance. That we needed to really kind of professionalize every arena, given the interdependency between Treasury, legal, tax, and financial reporting. It was important that everything was positioned and developed to the right level.
And was there one thing, if you can say only one thing, that we're allowed to speak? Because I know these topics are very sensitive when it comes to IPO, and there is very little that we can share. But if there is one thing that you can share from a Treasury perspective that you think, oh, I didn't know that we need to change that in Treasury for us to be an IPO eligible in terms of governance.
Yeah. It's not that I wasn't aware that we needed it. It was more that it reinforced that requirement. So for many organizations, you need a case for a treasury management system. Well, the case for a treasury management system in this context was ultimately control and automation. So that was kind of the catalyst for us requiring a TMS. But then, as part of that implementation, a treasury management system implementation is never just a system implementation. It is revisiting your processes, revisiting your delegations, revisiting your controls, because you need to design those and embed them within the system. Where the concern was across the organization was that you don't just then have to formalize that within Treasury. You need to bring people on that journey, which means you're engaging with your tax colleagues, you're engaging with your AP and AR colleagues. You're bringing everyone together to evolve a system within a short space of time, but also evolve your governance and your processes alongside that.
So before the decision to do an IPO, we didn't have a treasury management system.
No.
Okay, so the IPO was actually a catalyst for you to have a treasury management system.
Correct.
And from a control perspective, not from a
control perspective. Correct.
That's very interesting.
Correct. So everything from your processes, your organizational design as well. So I've changed up the structure within my function very, very quickly to have that segregation of duty, but putting the system in place as well, which was key.
When you say organization structure change, how big was this change versus what you had before in an IPO? And what, if I might ask this, what were the key changes in personnel or in adding or removing a specific role that you needed to have for you to be ready for the IPO?
The key thing was to bring in the right talent with the right behaviors. So what I mean by that, so I place a lot of value on soft skill. Treasurers need to be inquisitive. Treasurers need to have that risk mindset across each area of front, middle, and back office. They need to understand the big picture. They don't have to be treasury qualified. Depending on the role and the seniority of the role, that can be taught on the job. But then the right soft skill and the right
Attitude.
And the right attitude is what's key. But equally, the pace of change also required that I brought in people that had the background, had either seen it before, or at least knew conceptually how things should work and what it should look like. So that's what I did. I brought in a fantastic treasury manager that had worked in a smaller treasury organization previously, had or has the right mindset, has the ability to focus on continuous improvement and challenge status quo, challenge me. It's important that I get challenged as well, because, yes, I've seen what good looks like, I've seen what exceptional looks like, and I know what bad looks like. But by being challenged, you're also questioning whether or not that is in fact fit for purpose. I'll give you an example. So, BAT where it was, and they obviously, in the spirit of continuous improvement, you're always evolving, but there was a dedicated 10-year period that was focused on transformation. And anyone who knows British American Tobacco, BAT is the definition, in my view. Hopefully anyone who's watching kind of agrees with this, but is the definition of what best practice looks like. And being part of that journey, I was very fortunate to be part of that, because you learn, you challenge yourself, and you really kind of see a bigger picture than you might if you've been in a smaller organization for a longer period of time, where there isn't either the appetite or the resource for that pace of change. But over that 10-year period, the transformation happened. So, single instance of an ERP, cash flow forecasting, building shared services for centralizing treasury activity. So you see it all. But just because BAT is here doesn't mean that's where you need to go to in your journey. And sometimes that kind of moment of having someone with some treasury experience say to me, "Yes, Jason, but do we really need it, or can it wait?" Keeps me honest as well.
Yeah, that's really interesting, because and I mentioned this a couple of times in our episodes. I had this really, really great episode with Mark Hemmings. Did you see this episode?
I think I did.
Yes. So we had this really amazing episode. It did great on
Okay.
tax and treasury.
Yeah. Ah, yes. No, I did see it. I did see it.
Yes.
Yeah.
And he was mentioning his relationship with his treasury operations manager. And he was learning a lot from him. And I mentioned this because this part really inspired me a lot, because it's very rare that you see top senior people, managers, who having this way or this attitude with their subordinates, willing to learn from them and accepting that they challenge them.
I think people are everything. That is your biggest strength in an organization, your people. And I like this point that you made, because you need hierarchy for decision making. You need hierarchy for governance. You do not need hierarchy in terms of how you interact with people. So if you ask anyone in my team today, or anyone that's ever worked for me, they'll say, Jason very much kind of operates a flat structure. It doesn't matter if you've got 1 year of experience versus 20 years of experience. I will treat everyone in my team the same way, and everyone has a voice, because you you start with trust, you empower people within your team, what you find is that A, they're more open and more keen to deliver, but also they're more open to ask the questions, challenge the status quo. You know, the conversations I have with my treasury manager, 90% of his ideas I might shut down because I've either seen it in a different context, or I can see where he's coming from, but perhaps
You've seen this before.
Well, I don't necessarily need to have seen it before, but what you gain through the years within Treasury is you understand the strategy and you understand the effectiveness and applications of your Treasury tools to deliver your objective. So, going back to the soft skill point, I love the fact that there's the out of the box thinking. I like that I'm being asked or given ideas or being challenged, and I don't want that to stop. I will never take that as negative, even if 90% of the ideas might not be effective. Eventually, that 90 will become 80, 50, 20, and that's where the growth in that person as a treasurer delivers.
Yeah.
But always treat people with respect. Try to empower, and in my view, operate that kind of flat structure.
Going back to the organization structure.
Yeah.
So we spoke about the soft skills and what you needed your people to have for you to have the right mentality or be ready for the IPO. Speaking about the exact roles themselves, what did the organization structure look like in terms of departments before the IPO, and what changes you needed to do to be ready for the IPO? Did you make any changes, or you just kept the structure as it is?
Well, no. So there are a few things. I mean, before I joined, AP and AR reported into the treasurer.
Oh, really?
Yeah.
I've never seen that.
Neither have I. But that was the structure that was that was in place. There was a treasury supervisor, and there was a treasury accountant. The treasury accountant was mostly just kind of data input. The treasury manager acted as a bridge between AP and AR and treasury and the day-to-day treasury. There were a lot of things. There were lots of activity that would be done by the treasury supervisor that actually sits within the AP team. So it was very clear that segregation of duty didn't work in the context of that kind of post-IPO structure that we're trying to develop. So AP and AR were moved within the sphere of the financial controller. I mean, that was largely the major change. Other than within Treasury, me bringing in a Treasury manager, having a Treasury operations specialist, plus a Treasury accountant that works more like a Treasury analyst.
I believe this was very, very critical in terms of segregation of duties, and that's why I mentioned to you it's the first time for me that I hear that AR and AP report to Treasury, because this would create a lot of conflict. Speaking about segregation of duties, for the people who don't know what's the importance of segregation of duties, can you define segregation of duties, why it's important, and in Treasury specifically, if we can touch upon Treasury, how does segregation of duties look like in Treasury?
So look, let me give you a little bit of an example from when I started my Treasury career, just to show you how much things have evolved. So my first ever corporate role, I did work briefly at a bank in a Treasury department, but it was as an FX dealer. So the routine was that I would come into the office, I would do the daily cash positioning. We would post all the payments by, I think it was 12 o'clock, if memory serves. And then we would load those payments onto a floppy disk. Now, not everyone that's listening to this remembers what a floppy disk is. Predates a CD. I would then walk to a separate terminal and place that disk in there to then connect with the banks through a modem.
Mm.
and then make the payment. So the ability to tamper with the data on that floppy disk, which you could access and you could change parameters, was significant. Okay. Now the world has moved on significantly. You've got controls, you've got security protocols, but you still need to ensure that the person that is inputting the data cannot then also process that data.
Of course.
So if we go back to segregation of duty in today's context, I will have a scenario where we have received our medium-term cash flow forecast from the business. In accordance with our forecast, I can see that one of the markets requires funding. So in the system, and let me talk about it in the context of the TMS rather than the manual procedure. We would enter a transfer of funds from one legal entity to another. That would then go to an approval stage. So middle office will see that this transfer has been activated. They will look for evidence as to why this transfer has been evidenced.
Yeah.
Document the rationale. Now I'm talking in the context of a post-IPO world, because from a regulatory perspective in Sarbanes-Oxley, you need to have everything documented under SOX. And once that's done, then back office can ensure that what the system has done has happened by virtue of the bank statements and bank reconciliations. Once that payment has been made, then it needs to communicate back to the ERP to communicate that this funding has occurred, and then middle office will check that all the stages have been followed. At no point does the front office person that's input the deal gotten involved in the middle office activity, and certainly not in that release of payments. That release of payments is automated by virtue of an API connection between the TMS and the bank. So there isn't any kind of manual intervention. But that's what's critical, that there is that separation in force at all times. And if it breaks, if that process breaks, or there has been some sort of manual intervention, it means the governance has failed. And the way and the governance that's been replicated in the system has failed. So that's what's key.
So the key is to make sure that the initiator, the verifier, and the approver, and if there is someone who releases, all of these people throughout the chain are different. They are not the same.
But that's correct. But that's in the context of the actual payment approval, right? Where you do have an initiator, a checker, and typically, 4i principle, a dual approver.
And that's why when you mentioned that the AR and AP are reporting to a treasurer, this is where it gets tricky, because in that situation, you have the AP who makes sure that they have the right document, and the initiator of the payment, both are reporting to the same person.
Correct.
Or within the same department.
Correct.
So that's where definitely a change needed to be happen to be ready for the IPO.
Yeah.
You mentioned Sarbanes-Oxley Act.
Sarbanes-Oxley.
Yeah, and we were discussing before the podcast that it's very tricky to make sure that you're compliant with everything. And you mentioned that you cannot sneeze without documenting it. And if you sneeze and everyone noticed that you sneeze, but you don't have a document says that you don't, then you didn't.
It's true. It's true. So under Sarbanes-Oxley, if an activity has been carried out and you haven't got an audit trail or a series of documentation to evidence that, then it's never happened. And that's why I use the analogy of the sneeze, that if you sneeze, and even if there are 100 people in the room that have seen you sneeze, if it's not been documented that it's happened, it never happened. It's challenging. It's challenging because it's very easy when you've done a job for some time to become complacent. You have your delegated authorities, you've got your approval matrices. You will act on instinct based on what you've done and you know, a role that you've carried out for some time. Under something like Sarbanes-Oxley, you need to question every step. So someone's asked for an account closure. Who's asked for it? What's the rationale? Has it then been approved per policy by the treasurer? Because the treasurer is the only person that can say yes or no as per the policy to establishing new banking relationships, opening new accounts, closing accounts. But then it's not for the treasurer to then provide that sign-off. You then present a closure letter to the person under the delegated authority that can sign. So in the context that I'm giving you, it's the CFO. So CFO signs a letter. That letter then goes to the bank. The bank needs to acknowledge the receipt of that letter, and then, you know, the account can be closed. Something as simple as a Treasury report. So we have in place what's known as a Confi pack, which is a market and control pack. And that is produced to provide visibility to the CFO of all Treasury activity performed and upcoming activities. That's then sent. It doesn't need to be approved, but the CFO has to reply back saying, received.
Really?
Because under Sarbanes-Oxley, you can't just assume that because you've sent it, it's not gone into spam, it's not been read, it's not been received. Because if within that market control pack there's a potential market activity that needs to be highlighted, then there's no visibility that the CFO has picked up on that message.
Wow,
So
it's that detailed.
it's that detailed.
And I understand this report is internal for internal control. It's not something that's reported externally.
It's not reported externally, but if you're compliant per Sarbanes-Oxley, if your processes are compliant, if your documentation trail is, you know, to the T, then it gives your external stakeholders confidence in your overall risk and audit management.
Wow.
Which is key, because you know, ultimately, and I'll give you the example of an unrated company, which for now we're unrated. Banks will have their own kind of risk tools to look at kind of what is your counterparty risk. And though every bank looks at their risk-weighted assets in a slightly different way, but ultimately when it comes to kind of, you know, quantifying the risk, they will also consider who is the management team, what is the track record, what is the experience, what is the history, and what processes are being followed to ensure that you know, the right compliance is in place, and to ultimately ensure that the banks or other stakeholders have comfort that you're doing the right thing.
Wow.
So if you're SOX compliant, it gives the banks a bit more confidence that you're doing the right thing.
Can we touch upon the rating agencies? Have you went through the process? How does it look like? What's your experience with them? Or
So I've not gone through the process of establishing a new relationship, but I have maintained the relationships for Cadbury's, for BAT, and for Coca-Cola Europe Pacific Partners. So, you know, you need to have an understanding beyond your medium-term forecasts. You need to understand the business profile for the next 5 years. There should be a 5-year plan. You work very, very closely with your investor relations function on that 5-year plan. Every agency has their own specific risk metrics. You need to understand how those metrics work in conjunction with your broader financial performance. And similar to a bank relationship, you need to have an annual relationship discussion with your rating agencies to give them the visibility of how the business is performing, what the business is doing, because ultimately a rating is a moment in time. So what you need to do is give the rating agencies the tools alongside their understanding of the sector And that's what's key. The analyst that's assigned to you as a credit will understand the sector, but in the context of a tobacco company, for example, a Philip Morris is very different to an Altria. A BAT is very different to an Imperial Tobacco. So you need to make sure that you also guide the rating agencies on what is relevant to you as a business, whilst obviously acknowledging that it needs to be an independent view and there is integrity in the rating process.
Jason, I think we need to have another episode together because there's a lot of things that we didn't cover yet. And unfortunately, we're running out of time. So, yeah, we need to schedule another episode together for sure. But before I let you go, one advice you would give a treasurer who looking to draft new policy or reshape the governance, going to go through this process?
So my advice is policies are not a one-size-fits-all. Just because you had a policy in a previous organization doesn't mean you can implement it within the same organization. Same with the governance model. Just because it fit doesn't mean it fits in your organization. You need to understand the risk profile of your business, the risk appetite, and partner closely with your CFO and your board to understand how risk is perceived within the business, and then you can start to formulate your internal policy. And to my earlier point, it can't be a 200-page manual. It needs to be a policy document.
Great. Thanks a lot, Jason. I've learned a lot today, and I'm sure I'm going to learn a lot in the next episode together.
Thank you.
Thanks a lot, man.
Thank you for the invitation.
Thanks, bro.
Appreciate it.